Hey, this is Matt from InvestiQuant. Today is Wednesday, January 19, 2022. Today, the markets gapped up within the prior day range following yesterday's week close. Yesterday closed down at a 10-day low. Today, we gapped up and we consolidated a little bit earlier on and have since kind of broken lower. We are now trading below the close from yesterday here in all four of the instruments. So we are trading lower than that 10-day low close from yesterday, and that's exactly what we'll look at this afternoon. So let me get this set up using all four instruments. The setup will be based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading below yesterday's close. I'm going to add that to the test by going to the post-open filters, hitting equals for the intraday close versus daily levels, saying specifically that is below the prior close. Right there, I've got equals next to that. You can see it's been added to the test up top. So that means the 3 o'clock price is below yesterday's closing price. And then I'm going to go down to the next library down, the price patterns library. And I'm going to say that yesterday closed at a 10-day low close. I'm just going to grab that from the active today. The active today is telling you what is true for today. So if I go down to the new lows section here, day after 10-day low close is an option. I clicked on that. It's been added to the test. It comes from our new lows category here. Second option, you can see the equal sign there. All right, lastly, indicators library, we are below a 10 and above a 200-day simple moving average. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when the prior day closed at a 10-day low. And then at 3 o'clock the following day, you are trading below the prior day closing price. So you are on pace to make another 10-day low close. This is taking place below a 10, but above a 200-day simple moving average. Historically, there are 144 samples of the S&P with this pattern dating back to 2003. For the NASDAQ, there are 163, 158 in the Dow, 169 in the Russell. And if we look at the win rates on them, they are all skewed towards the downside. Looks like the S&P is the weakest of the group there with a 40% win rate. You can see the equity curve here on the S&P. I'm just going to highlight that, just hovering my mouse over the ES here. Very consistent to the downside there. Very smooth equity curve to the downside. That's the weakest of the group there. That's a 40% win rate. The NASDAQ is that orange equity curve with the spike at the end. That one's at 45%. For the Dow, it is 44%. And for the Russell, it is 47%. So all of them below 50%, some of them a little bit weaker, S&P being the weakest of the group. If we look at the average moves, the average loss is larger than the average win here in the S&P by a decent amount. That's not the case for the NASDAQ. The NASDAQ has larger average wins. For the Dow and the Russell, the average loss is larger than the average win. So 3 out of the 4 instruments have larger average losses compared to their average wins, and all 4 of the instruments have win rates below 50%, with the S&P being the weakest at 40%. So generally speaking, this has been a bearish pattern historically into the close. Hopefully you found that helpful. Good luck today. We'll see you next time.